middle of the month already, my good man. But as always, welcome to the Freedom Cage podcast, where we like into a free state of mind each and every pay week on all Disney's, of course. And to my right, I got my main guy, my ace. My left, my right is me, Shawn, better known as Mr. Singing Me on all your socials.
You know.
And me, I'm Kenny, man. I'm also known as King Kaepernick on those socials. But today,
very special episode here at FCP, man. We get a chance to sit down with a man through a time has steadily built and has maintained the right to wear many, many hats from thoughtful progression and consistent hard work. But unlike some people, these hats were not just given, due to just being in the right place at the right time. All the hats in this man's locker were self-made from scratch with dedication, making very few mistakes, and understanding the need to pivot before the market changes ahead. Not to sound too cliche, but he is not only a businessman, but he is a businessman. Like, with no further ado, man, welcome to the Freedom Cage podcast stage, Mr. Ramel Lee, who is the founder and managing partner of RD Lee Capital Partners, which is a private equity firm that focuses on providing investors with substantial returns with alternative investments. I got it. How you doing? How you doing?
We're doing well. That's one of the best intros I ever got.
Oh man. It's only up from here, baby.
That's it. Get used to it.
Facts.
I mean, we got to start from the beginning, right? I think every great successful hustler or businessman has an origin story. So tell us a little bit about, of course, where you're from, man, without telling us where you're from.
Telling you, I'm from where no. You know, me, I think you could just tell by the way I moved, born and raised Brooklyn, New York, Flatbush to be specific. You know, come from hardworking, a long line of hustlers in my family, legal hustlers, of course. And you know, always been taught to always have another source of income, another you know, flow of money coming in, because things change rapidly, and you always want to be ahead of the curve for when changes happen. You know, you don't want to be playing catch up with your finances and struggling all the time. So you know, you get what you can when you can get it. And you know, when you save for a rainy day, it always seems to rain the next day. So you just keep saving for that rainy day. So that's kind of like how I was brought up.
Yeah, man, that's what's up. Just talking about that preparation financially, man. I mean, I think that's something that Kenny and I talk about a lot on this show, and you know, us having the opportunity to have you on here, not only watching you do this like in real time, but having the chance to actually deep dive into that today, it means a lot to us, man. And we are just so proud of you. We're so happy to have you here, man.
Thank you.
I know a little while ago you was talking about, you know, football's happy Sunday as always for everybody here, but history's being made this first weekend, man. Did you happen to see all the black QBs on the starting lineup?
Listen, you know, as a former black QB, you know, I feel like I might have been a little ahead of my time, but you know, it's good to see the rest of the world catching up, seeing that not only be able to throw the rock but run the rock exponentially increases the success of your offense when you have a quarterback that can do multiple things. And I think people are just starting to come around to that. You know, unfortunately, it was a little too late for a lot of brothers that these creative offensive minds didn't know how to use them right. But you know, now that they do, you know, the sky's the limit here. You have to be good at many things to make it as a quarterback now in the league. And you know, we seem to be good at many things. So yeah, it's good to see.
Absolutely, man. So we know you're an owner now, right? But like you said, growing up in Brooklyn, coming from a long line of people who knew how to work hard and actually go and get a dollar. Do you remember, you know, earning like your first dollar? Like,
well, funny enough, my first job was with the post office. before there was like an Amazon delivery and all that other stuff. I worked for the part of the post office that delivered packages. So I worked in the post office for about 2 years. No, for about a year, and never put a letter in the mailbox. I either delivered packages or I brought the actual mailmen that put letters in the mailbox, uh, their sacks of mail that they couldn't take out initially from the post office. But my time there, I was 18 years old, and there was a guy, he was like 62, and he was retiring. And, we had like a little retirement thing for him at the post office. And he comes to me, he goes, I go to congratulate him, like, hey, congratulations. And he grabs me, he goes, leave now while you can. And I go, what? And he goes, before you get a mortgage and a wife and kids and you can't leave now. And that always stuck with me, right? That always stuck with me because at 18 years old, working at the post office, I'm making good money, right, for an 18-year-old kid. But it led me to believe that, that wasn't it. Being at a place 40 years and just relying on a pension. And he looked pretty broke down for a 62-year-old. Maybe it was my 18-year-old eyes that saw it that way. But
it probably was.
But yeah, I said, no, I says, a guy who finishes his career tells you this ain't a career, it's time to go. And I think I lasted maybe another 3 weeks after that. And then I got out of there. But it kind of set the stage for me to know that although I would have other civil service employment, that I couldn't just rely on being an employee, so that's what I remember most about like my first job.
Shout out to the guy that put you somewhere where you didn't think you had to be. Shout out to the OG, whoever he may be.
I can't remember his name, to be honest.
And those people are so crucial, man, because I remember being in a similar position, and you feel like since you're young, there's something about the workforce that that they don't. But to Kenny's point, like you heard them out, you processed it, and then you executed it, man. So for all y'all listening, y'all youngins that's just getting started in the workforce, man, the whole point, man, if you're really trying to get to financial freedom at some point, is to be your own boss and make your own move. So thank you for sharing that, Mel.
Well, of course, yeah.
Okay. All right. So now, the mentor at the job told you, hey, getting money, but ain't enough money. Go find something happier to do. You know what I mean? At what point did you realize, like, all right, although this money was good, I got to go get better money now? When did you realize, like, money's just getting money was more so in your DNA? Like, you got to get to it.
To be 100% honest, like, look, I'm not going to lie. I love money, right? But it's not so much the money, right? I love the sport of chasing it. I love building things that's going to create it. Money is just a scorekeeper, right? It's a tool. For me, it's not even a real thing, right? It's a concept. But it helps you keep score and not against other people, but for yourself. Like, is what you're doing successful? Is what you're building working? Is what you're offering to people what they want? The money just keeps score. Where I could say that played out big time is, shortly I started my first business. I started was Lee's Entertainment, right? And so we were doing event promotion and production and stuff like that. And you put together a party, you throw a party, and you have 400, 500, 600 people in the venue, and that's great, right? It seems like you did a really great job, but if at the end of the night you didn't really make any money, how great of a job did you really do, right? So that's where the money part comes in as it keeps score, right? Because if you throw a party and you let everyone in for free and drink free and everything, then you just hosted a good time, right? You didn't really run a business. You didn't really do anything that people were willing to pay for. But if you threw a party and you only had 100 people, but they each were willing to pay $1,000 to come in, you did something. You offered something that people wanted, that they were willing to pay for,
Mhm.
and that's how you know you were operating a good business. So for me, it's not really so much about the money itself, as much as it tracks whether you're doing a good job running a business and giving people what they want.
Yeah. It's almost like you could tie that to like social media, right, Kenny? Like if you look at followers, like it's great if you have 1 million followers, but if you can't translate that into any type of benefit for yourself, whether you're selling something or you're just a content creator, then what do the followers really mean at the end of the day?
Correct, correct.
Right.
I
Yeah,
got
that's
the
a
meme
good
going
point.
now.
Yeah, that's a good
Got
point. Like, I think that's why the social media companies, they move from looking at your followers and your likes to actual engagement, right? It's easy for someone to just click a like, click a heart, follow you. But when they actually start engaging with what you're doing, that means you're offering content that people actually want to see and are interested in, which means you have eyes, which means you can generate revenue for the social media company. So, yeah, definitely.
those are good, like pros and cons as far as the party end of things. Those are good gains. Could you describe some losses you might have had to go through during that phase?
Oh, I've had losses in the in that phase. Yeah. Oh, uh, um, I it's partly why I stepped away from it. Um, I'm a team person. Um, I do I do move at a certain speed, um, and it forces me to shed a lot of teammates. But the ones that could keep up with me, we make a powerful team, right? We go far and we do great things together. Um, in that business, people get into it for different reasons. Me, I was into it for the money. Some people got into it to be mini celebs. Some people got into it for the girls. Some people got into it because I didn't realize it at the time, but they were alcoholics. So you know, um, so you would comprise yourself of a team who were good at what they were doing as far as promoting and being people to come out. But when it came to the business aspect of it, they weren't as good at that, or they had different motives. And just starting to place a value on your time, right? You start calculating how much your time is worth, how much per hour your time is worth. And at some point, it wasn't happening for me with that business. As I was doing other things and my time was becoming more valuable, I wasn't hitting that number through that business. So I had to step away from that one. But it was fun. It was fun.
No, no, it's great that you mentioned that because you're trying to tell people to look at themselves as the CEO of their own brand. So to have that mindset at that point to look at it and be like, this isn't beneficial for me, and then step away. That's a mindset a lot of people really don't adapt, I would say, soon enough.
See, with a lot of people, so where we might get into this a little later, but where I think a little differently from a lot of people is people turn their passion into a business, and they become emotionally tied to the business and become blinded by the facts of the situation that they're in. I let the numbers guide my business decision. I try to take as much emotion out of my business decisions as possible, right? You have to go by the numbers, right? It's business. You have to go by the numbers. Um, I'm not saying you don't have to be passionate about it, but you have to be realistic and always go by the numbers. And when the numbers tell you it's time to get out, then you have to get out, no matter how much you love it. Otherwise, it's going to cost you in the end, and it can possibly ruin your love for something that you had. So for me, my passion is in the business system, not necessarily the business. So I'll build a business system and follow that system to the T. So even if if I'm looking at it, I'm like, oh man, I put a lot of hard work, a lot of sweat equity into this, and I really love this business. But if the numbers start telling me, it's declining and there's no return in sight, or you can't grow it any further, then it's time to move on. Because with business, you're either growing or you're dying. So,
Absolutely.
Makes sense. Makes sense. Get in while it's hot. Get in while it's hot. After that phase of your life, as far as at the very beginning, you moved on to bridge and tunnel. How did that come to fruition? Like, all right, you did the post office. You started with the promoting for a little bit, but then you moved into that. What struck that chord?
Well, I have to, give a lot of thanks to my mother. She, her prayers and her works have guided me to this point in my life. I don't even think she realizes to what end. So, I had no idea what the job was, and she made sure that I went and I took the test for it and I passed it and I got in, and, I wasn't even sure what the job was my first day. I walked in, and there was a sergeant and a lieutenant there checking our IDs. And mind you, this was maybe a few months after 9/11. So all I thought was, oh man, security's really tight down here for 9/11, right? They got big cops down here checking IDs, And then they closed the door and they said, we'll be your instructors. And so I was still a little confused. And then they said, you're going to be officers. And I was like, wow, what job did I sign up for? And then so went through the training and I needed a job at the time, and so things worked out. Once I started doing it, it was I found a way to exercise my entrepreneurial spirit in the job. I was an officer for just a short period of time. Then I became a supervisor, and then as a supervisor, another part of my personality got to take hold was that I'm a big proponent of things being equitable. I really truly believe in justice. And so as being a supervisor, I was able to ensure the officers that I was supervising were behaving in a manner that, I could be proud of, behaving in a manner that they treated everyone that they came into contact equally and equitably. I know as our people what we have to deal with. And so I made sure as a supervisor and always throughout the ranks that the people that reported to me dealt with everyone they came in contact with respect and fairly and consistently as everyone else. So yeah, that was my journey in bridges and tunnels. But I got started just because, my mother said, hey, you got to take this test.
Yeah. I'm sure the delivery was a little sharper with different words.
If you got a Freedom Cage After Dark version, I can get you more detail.
Oh man, no, that's amazing. So the transition from into leadership and taking those tests and wanting to take your career to the next level, what really motivates that? Because in different fields you find people that get very comfortable and they just want to do their job and go home, which is fine. Everybody has there are different points in their life and they want to do certain things. But there was something in you that said, if I want to really impact change, I need to be in a certain position of power. And what drove you there? Was that just from how you already came in and everything you've been through? Or did you see something in the company that was like, no, I need to be here so I can change this?
Well, that's a funny story. like I believe it was our first or second day of training. They I believe the union came in, and they gave out like a sheet of all the ranks and the pay structure and everything. And like I said, I didn't know what the job was, and so I looked at it, and they had officer, sergeant, lieutenant. And so, mind you, this is my second day ever. I looked at the paper, and I pointed, and I raised my hand, go, "Hey, how you get this lieutenant job?" And they were like, "What?" So how you get this lieutenant job? That's the guy who makes all the money. How do you get that one? I'm all the way down here. He's all like, yeah. They said, "Well, worry about passing probation as an officer first, and then you start asking questions about that." But I've always been an ambitious person, um, and I always look to maximize my upside. Right, so um, wherever there's room to grow, to expand, that's where my sights always set, whether it's personally, whether it's I'm an employee, whether I'm an employer, investor. I'm always looking at the growth potential, the upside. So for me, it was just a natural course of events, right? uh, there's another level, there's more upside for me to it. Yeah, that's what I'm going for. That's what's next for me. um, and also in that type of environment, moving up, uh, I had more say so, I had more freedom, more control over what happens around me, and that's an important thing for me as well. Yeah, so.
Now, I gotta ask, man, because our sometimes it be your own people. That's a line that really sticks, I think, with any industry, right? What advice could you give to someone who's afraid to make that transition because of the responsibility they will now have to hold their own people accountable?
Well, I'll say this: it's not for everyone, right? I don't look to put everyone in a box, right? Like you got people on the internet running around saying, "Oh, you don't work for anyone. You got to be an entrepreneur. You got to do what feels right for you, right?" It doesn't that if it doesn't feel right for you, then I would say don't do it because you'll be miserable, right? The one thing you want to do is in life is be happy, right? So if that's not a thing that you're comfortable with, don't do it. If you not comfortable with being responsible for the actions of others, then you don't want to be a supervisor, right? Because then you're going to be a horrible supervisor because you're going to be busy covering up for people rather than uh, helping them excel at their job. And if they don't, holding them accountable. Um, so as far as people being anxious about it is another thing. If you're willing to do it, but you're just anxious about it, then I would just say, just always be fair and be consistent.
Mm.
And fair doesn't necessarily mean treat everyone the same, right? Bill Parcells always used to say, I treat people according to their talent, right? If you're Lawrence Taylor and you're late, you're late. If you're whoever the guy we can't remember and you're late, you're off the team, right? But you're fair with that, right? Like,
Yeah.
if the guy who we didn't remember got to Lawrence Taylor player status, he could be late too, and you just got to be consistent with it. Being fair, consistent is always a way to lead people that they can respect. They may not always agree with your decision making, but as long as you're fair and consistent with it, they'll respect it.
Your time working at Bridge and Tunnels. Do you have a funny, serious, or good teaching moment story that you carry with yourself to this day?
I mean, being there 22 years, there's a
Things have been
lot.
seen.
Yeah, there's a lot. Um, I would just say one of the biggest things that I got from it, as far as teaching, is you learn how you can become uh, jaded or numb to things that you shouldn't be. Um, the amount of like bad things you see, people committing suicide, horrible accidents, people seriously injured, uh, things like that, where it should bother you, right? It should be traumatizing to see stuff like that. But then over the years, you just become like completely numb to it, and you don't realize that part of your humanity is gone, right?
Mm.
Um, and it's a realization that you come to, and even right now I'm not really sure what you do about it. Some people might suggest therapy, and that may be a good way to go, but as far as but you always have to strive to maintain your humanity, because it can be so easily lost, right? Just by being exposed to things repeatedly, it can so easily be lost, and not having your humanity makes it hard for you to connect with people. Um, and it's all in life is all about connecting with people. That's why I think you have a lot of people in law enforcement who you have a lot of high suicide rates.
Mm.
I think a lot of them lose their humanity and then can no longer connect with people and don't know how to cope with it. So yeah, I know you're probably looking for something funny, but
Yeah, that was the serious side. That was the serious one. It happened. It's real. It's real. We appreciate that. It's real.
that's something. When you become like the old man in the room, you start thinking a little differently about things. But
Yeah.
funny. Halloween used to always be funny on the job. Like people come out, they're out on the road in their costumes and being stupid, drinking and driving, and getting arrested in their costumes, and you had some great mug shots. There was actually a guy. Yeah, you actually had a guy who was dressed up like a TV convict, like with the black and white.
Bad
Yeah,
timing.
yeah, he got arrested wearing that. That was
Oh man.
a funny one.
That's a good one.
Oh man, no. Hey, listen. I think it's great what you touched on, especially since September is National Suicide Prevention Awareness Month. So I think that was a great point to touch on, and I think it's very unique the situation you're in, man. You've seen the bridges and tunnels transition from everybody having to stop and give money to now people are just running right through there. Like you can see the innovation and the complete changes that everything is happening. So it's interesting when you watch something just completely change. Um, so now let's talk about the next step that you take in your career, right? It's that entrepreneurship that you just talked about for those who are ready. What would you say was like the first official step, like whether it was submitting the paperwork or doing the research? Well, what really was like, all right, I'm about to create this company. This was the first thing I did.
Well, for me, it was just deciding what I wanted to do. So um, I had went back to school to get my master's degree in security management, and so to be quite honest, I spent money on it, and so aside from possibly getting promoted on my job, I was searching for a return on investment. In the course of my studies, I learned a lot of things about security as a science, but also as a business. And from there, I started looking into things that I could do in the security industry to make money. Like I said, always entrepreneurial spirit at heart. So that was one of my first thoughts. So I just started researching. Okay, these are the different businesses in the security industry vertical. Um, what resources do I have to enter any of these businesses? Uh, and started researching how to get them off the ground. And that's how we launched our DL security solutions.
That's our next question for you. Throughout this process, you had to have a moment where you felt like, you know what, this may not be in my best interest, but I still feel like it's the right thing I need to do. Like, what advice would you give to someone who might have a bad relationship with just taking risk, or just someone who's just too scared to do it?
Well, I mean, yeah, I have that thought every day, right? That right, that's one of those things with being an entrepreneur. Like, you say to yourself, like, is all of this worth it? But as far as being risk adverse, you know, I hate to be cliche, but like they say, no risk, no reward. Um, the biggest, I always think someone once said to me, if baseball players are out of the four major sports are paid the most money, right? And to be one of the highest paid baseball players, you have to be right just 3 out of 10 times, right? That's a 300 batting average, right? If you're right just 3 out of 10 times, you're going to be one of the highest paid baseball players in the world. Um, you look at venture capital, right? They look at if they're right 1 out of 10, 1 out of 100 times, right? Their fund is wildly successful, right? Risk isn't so much about not taking them; is more about taking enough of them, right? I think people they take a risk and they take one, and then it doesn't work out, and they're like, "Oh man, I knew I shouldn't have did that." I'm of the mindset that you have to take more risk. You have to go out there. You have to spread your risk out. You have to try a lot of things, and because one of them is going to hit, right? Unless you're the most unluckiest person that ever walked the planet, one of those things are going to hit, and they're going to make up for all the things that don't hit, right? So I think a lot of people they don't take enough risks. They take one or two and they don't work out. I can't think of how many it was, but I think Thomas Edison had like I think a few hundred failed inventions before the light bulb, right? Imagine if he, after the first two, he's like,
I'm good, right?
I don't know, right? Somebody eventually
Wait an hour till the sun comes back up tomorrow.
Yeah.
No biggie.
Just imagine, right? Think about just some of the companies, the things that we shop and stuff, like how many different products they've put out that no longer exist, right? How many different brands of Coke and Pepsi that they had this big campaign for that you don't see on the shelves anymore, right? They took a shot, it didn't work, they moved on, but every now and then they come up with cherry Coke and people love it, and now it's a staple, right? And it made up for all those Coke Zeros or whatever that didn't work out, right? So risk is more about taking enough risk and taking calculated. Risk is should be calculated. You should take educated risk, otherwise you're gambling, right? And you don't. And when it comes to finance and income, you don't want to gamble with it, right? If you want to gamble, you go to Vegas, you set up a FanDuel account and have at it, right? But you don't want to gamble with business. You don't want to gamble for your income. Unless you're a professional gambler, and I don't know how they do it, but so I can't that. But risk is more about taking educated risks, being diverse with your risk, and taking enough so that they will pay off.
It's so interesting that you mentioned that, because they've been talking about, with the expansion of legalizing sports betting, there's been a heavy decrease in investing, whether it be stocks, real estate, anything like that. Like, people are looking at gambling as that quick buck. So they're scared as to how this can translate into other issues, right? We just talked about suicide prevention earlier. We talk about debt. So it's just, I just found it interesting that you mentioned that, because there's that correlation that comes with gambling. So in sports, they always ask athletes about their welcome to the league moment, right? Whether it's you're trying to stop LeBron from dunking and he dunks on you, or you're in the NFL and you get sacked by TJ Watt. Tell us about your welcome to investment moment. Tell us a good one, and then one that really taught you, like, yeah, I'm probably never gonna try that again, or if I do, I'm gonna do it a little differently.
Well, I mean, so so when I started RDL Security Solutions, I thought, hey, I have all these years of law enforcement experience. I got my master's in security management. Yeah, I'm gonna be like a consultant. Right? I'm gonna, people are gonna pay me to tell them how to run their security departments and stuff like that. And a lot of I got was, who are you? Well, I'm this guy. But like, okay, that's great, but like, do you have any experience with this? Do you know, like, well, no, but like, look how smart I am. Yeah, that's great, but why am I giving you money? Like, what track record do you have? And that's how I kind of developed the notion of proof of concept, right? Um, you know, uh, it, it's like I think there's like a Jay-Z quote for everything in life, and so one of his biggest quotes is, "You broke, what the hell you gonna tell me?" Right? And that's just basically, to me, that's proof of concept, right? No one wants to hear from you if you have no proof of concept. It could be something small, it could be something as simple as a case study, but people need proof of concept that you know what you're doing, that you can handle it. And so what I had to turn around and do was now get into the security guard business, right? So that is where I took the company to, was getting security guards. And then once I did that and got security guard contracts, and people now know me as somebody in the security business, then consulting and training gigs came up, because now I had proof of concept of someone who understands the security business by starting the guard business. So, yeah, my welcome to the league moment was, kid, we don't know who you are. We're not listening to you, and
Need
then
more people.
the way and then I've carried that lesson forward with my other ventures too, is having a proof of concept first, and then going out to people saying, look, I know what I'm doing. So,
Mm-hmm. Yeah, no, I agree with you, man. What was the line? He said you couldn't talk about it if you ain't live it. So
yeah,
I
right.
definitely resonate with it. Yeah.
Super important. It's weird. That first step is always weird. Like, even when you go get a car, get a house, they go, "Oh, great. Have you done this before? How's your credit?" Like, this is my first one. They go, "Ugh." We don't want to be the ones to be that help you with that first one, but we understand you got to get there. So maybe next time, you know what I mean? Like,
Right.
it's rough. It's rough.
Or, oh, great, this is your first one. Here's a ridiculously high interest rate that makes it nearly impossible for you to afford this. But if you can pull this off, we got you on a good rate on the next one. Yeah.
Come back in 36 to 48 months. We got you.
Yeah.
RD Lee Capital has moved on to bigger things. But before we even get that, as far as a root base, like, I need you to explain this photo first. Talk to us.
Man, look like he's running for president. Look at
it. Right?
So, no, I have to give credit to who I call my hotel sensei, Davon Reeves. She's amazing. I know she's owned at least 4 hotels in her career. She's been in the hotel industry for probably 20 years. And she now is the founder of a platform called Vestor that allows you to invest in commercial real estate deals. And so, she is the one who taught me about the hotel business and got me into my first couple of hotel deals. And also into that Vestor platform. I'm an investor. We're an investor on that as well. And so, she just wanted to put it out there that, the good work that I'm doing in the hospitality industry, and how we're moving along as investors financially, but also in educating people about the hotel space as a whole.
That's dope. I mean, since you brought it up, man, tell us a little bit about, Vestor and what it is.
So Vestor is uh, similar to is a crowdfunding platform. So crowdfunding is where uh, non-accredited investors can get together to pool their money for a specific investment project. Think one of the most popular crowdfunding platforms is GoFundMe,
Mm,
and that's So if you're familiar with GoFundMe, you're familiar with crowd funding. So, but that's like that's donations. Vestor is uh, think of GoFundMe, but for investing with a return on the money that you're putting into it into commercial real estate deals. So uh, we'll be putting a hotel fund on there, basically meaning that people, depending on your income limits and the minimum that you can invest, you'll be able to invest in our fund, and we'll pull all the money together and go out and buy economy and limited service hotels.
nice. Nice. It's always great to learn about stuff like that because if anybody's even thinking about anything in regards to investing or learning more about crowdfunding, I mean, we're going to talk a little bit more about your first webinar in a bit, but that was my first time learning about a lot about that stuff. So, yeah, man, really good information.
A quick sidestep for you, Ramel. Fan of hip hop, I presume. If you could think of a rap song that best describes your initial interest into hotel investment, do you think you could pull one out the bunch?
Uh, Man, I'm trying to think of the name. I think it's You Don't Know. 1 million,
That's,
2
that's Shorty
million,
Love.
3 million, 4.
Yep.
Oh, okay.
Yeah,
That's it.
yeah. I
About
would
the
say
money.
I would say that probably would best describe my interest in hotel. I mean, what really got me into it, hotel investing, was I was talking with a friend of mine, and there's Robert Kiyosaki, guy wrote Rich Dad Poor Dad. He has a game called Cash Flow, and basically it's a game that's supposed to teach you about investing. And so, we were talking, and I said, what if like Monopoly was originally supposed to be an educational game, right? Because all the principles of Monopoly, when it comes to real estate, stands true, right? Like, you get Baltic for cheap and people land on it, you can make a little money. But if you get the Park Place and people land on it, they got to pay big rents. And you want to buy the block so you can control it and stuff like that. And if you go to community chest, sometimes you got to pay extra taxes or for extra repairs unexpectedly. But ultimately, the goal is to put a hotel on your property. So I said, why am I playing games? Let me just go straight to the hotel, put a hotel on the property. And so that's what got me really interested in learning about hotels and investing in hotels.
That's great. I love that analogy. I really do. Because now it makes you just go back and think about all those times where I was frustrated losing. But
Oh, man.
And listen,
The man was always making side deals in Monopoly. It was rough.
listen, I've always been the guy in Monopoly, like you take it too serious. I'm like, y'all, let me, like, listen, it's the game, it's the game. You pay up or you done,
That's right. That's right. But it's perfect, right? Because it goes back to what you were mentioning earlier with emotional intelligence, right? Some of us develop it a little faster than others. And when when you learn how to manage the emotion and really just focus on the business, like you said, yeah, something as simple as a game of Monopoly, now you can translate that into big business, like you said. So let's come back to RD Lee Capital Partners. You say you got an elevator pitch with somebody. What's the mission for this company?
So just to not to give, I don't want to give like the website technical mission, right? So, basically the mission is to get retail investors um, an opportunity to earn substantial returns on their capital while we take the capital and disperse it to businesses with great management teams so we can add value to the companies that we buy that lead to providing those substantial returns to retail investors. Our real mission is that we see that there's a gap uh, where there's the accredited investors, people that are making really good money, that have that's probably already making good business decisions, have investments and things like that, and aren't really struggling to get ahead. And then there's people who they just don't have enough money to invest to begin with, right? There's this gap there where there's people who have enough money to invest, but aren't allowed into these investments that'll help them get ahead. So where Ardley Capital Partners comes in is we're creating investment vehicles to allow those people the opportunity to get into these alternative investments that will provide returns, passive income to help them get ahead. Um, these are things that I had to learn as I started making more money and things like that. It wasn't until my income and net worth got to a certain level that I started being afforded a whole bunch of opportunities to make even more money. That whole thing about the rich getting richer is a real thing, right? There's laws that apply, and they only allow people that make a certain amount of money to invest their money.
Mm.
And so, so think about that, right? You already have money, right? And you probably already got, money in stocks and bonds and stuff like that. And the government says, hey, there are these funds, right? There's these investment vehicles that generate returns superior to the stock market, but only if you make a certain amount of money a year, you can invest in those, right? So where you're working and you're trying to get to a certain place and you're just seeing people just exponentially growing, you're like, how the hell is this happening? That's because they have the opportunity to put their money in these investment vehicles that create these returns for them. Now what's changed over the past few years is that they created some exemptions to where people who, so I'll get to, so an accredited I'll backtrack a second. An accredited investor is someone who makes at least 200,000 a year for income, or a married couple that makes 300,000 a year combined, or has a net worth of over $1 million, not including their primary residence. So that's an accredited investor. Those people are allowed to invest in pretty much anything that they want. So if you don't have that, then you're not afforded the opportunity to make these investments. What we're doing at RD Lee Capital Partners is we're using an exemption called Regulation CF, the SEC, that allows non-accredited investors to invest in our funds. So if you don't make the $200,000 a year or don't have the $1 million net worth, you still will have the opportunity to make investments into these alternative investments that when executed properly, will provide returns that beat the stock market. And a lot of these funds, they have cash flow, so you get distributions. In particular, something like the fund of with the hotels, you're talking about uh, cash flow distributions from the hotel revenue plus uh, equity achieved through the real estate value of the hotels that are purchased. So your money's making money. Um, when you get to a certain point, you want to get to where you're not trading your time for money. Um, a lot of people are they throw out phrases like passive income and things like that. If you're working for it, it's not passive, right? If you have to go and do something for it, it's not passive. The only real time you're making passive income is if you're investing your money, right? When your money is making money for you, when you're making your money the workers, right? So passive income is, hey, here's my $10,000, and then money starts coming in for you, and you're not doing anything else but other than giving your money, right? That's passive income. A lot of people have side hustles. A lot of people are self-employed, not really business owners. They're self-employed. There's a difference between those two things. But if you're trading your time for money, it's not passive, right? And so you have those people in that space where they're working hard to make their money. They don't have a lot of time to exchange for more money, but they do have a little extra that they can invest. But because they don't make a lot more money, they have to find, basically companies like mine that create vehicles where they can invest in. And the reason why there aren't a lot of companies like mine that take non-accredited investors is, one, the amount of oversight that you have to go through when you take money from non-accredited investors. A lot of people feel isn't worth it. Also, you're limited on the amount of investors that you could take on and the amount of money you can raise. So you'll have a fund like one that Bridgewater Capital has, right? You can't get in. He only takes 2,000 investors. Well, less than 2,000, 1,999 investors, right? That's all. That's the max he can have. You can't give them a check for less than $100 million, right? But he has a cap, right? He's been in business for a long time. He does a phenomenal, right? You cannot get into his fund for a check than less than $100 million, right? Well, what R. Lee Capital Partners is doing is creating their own fund that will raise the $100 million that can possibly get into a fund like that, where we can take advantage of that type of stuff, right? So that's what we're doing. So it's partially, I'm not Robin Hood, right? I'm gonna make some money myself, right? But it's also a way for people in that sweet spot that aren't quite the accredited investor yet, but have money to invest, but looking to get ahead for it to be passive. That's what R. Lee Capital Partners. That's our real mission. Our real mission is to get those people some passive income.
That's beautiful.
Like from the outside looking in, the ownership in the hotel industry might seem like a locked place, like a lot of people just can't gain access to. But you kicked that door down. You know what I'm saying? You found a way into said industry. Once you were inside, though, there was a graphic in one of your webinars where you mentioned that African Americans only make up 2% of all hotel ownership. I'm gonna share that graphic with everyone watching now. Now, once you was able to get through that first door, get keys to the situation where you go, you know what? I'm not too comfortable with this. Like, what was your first reaction when you first seen these numbers?
Well, unfortunately, I wasn't too surprised that we had such low ownership. in the hotel space. Um, I was very surprised that Indians, Southeast Asian Indian Americans, uh, own 60% of the hotels in the United States. Um, but for me, us only having 2% ownership, for me, it represents a growth opportunity, right? That's a sector of investment that our people are not taking advantage of. So if people are looking to invest their money into alternative investments and looking to diversify their investment portfolio, if only 2% of ownership is African American, that means there's tons of our people that this is an opportunity for them to diversify their portfolio. So while I wasn't so surprised, I looked at it more as an opportunity, a growth opportunity for all of us.
So as Kenny mentioned, man, kicking in the door and saying, this is something that I want to do because you saw the growth opportunity, right? Tell us a little bit about, the preparation of going into something that you're from my knowledge just getting started in, having the confidence to stand in front of a room and people and tell them, these are actionable steps that if you take can, lead to some sort of progress. What was that preparation like?
What what I did was educate people on the asset class of hotels, right? Just give them education on how uh, the investment process works with investing in any type of hotel and the different risks that are involved with it and the income growth upside to it. Um, Whereas that webinar was the first webinar I did. Uh, since I've been learning about hotels and investing in them, you know, that's all pretty much people have been wanting to talk to me about. Um, it's a funny thing, right? Like when we had the logistics business, uh, that's all anyone wanted to talk to me about. I was like, wait, how did you do this? How did you do that? Now that I'm doing it, it's all people wanted to talk to me about. So I've been telling people about it, educating people about it, and people have been having questions. And the questions I haven't had answers to force me to find the answers. So I go back, find more answers, and now the next time the questions come up, I have the answers for it, and I keep going, and it's helping me learn. Iron sharpening iron. People that are really interested ask really good questions that make me think and make me more knowledgeable in the space to the point where I felt confident enough to have a webinar to teach people about it. Because once I started speaking to people and I knew the answer to every question that they had, I was like, okay, I can now go out there and, tell people. And I put the webinar together quite honestly because I had about maybe 20, 30 people that wanted to talk to me about it. And I said, you know what? I'm going to get all of you together
Mhm.
and
Time.
say this one time, right?
Yep.
And, um, but now, to be honest, all that did was now another 60 people have questions and want to know. So I'll probably have to do another one and get them all together and, and make it more of a regular thing that I do.
That's dope. But that's dope. That's what follow up is. Like, what I'm saying, as far as but what do you do to change that now? Like, you know what works because you see people tracking to it. What do you increase? What do you update? What do you follow up the initial with to keep bringing more in?
So what would happen? The next step for us would be is to actually pitch, right? So to actually give the offering of what we're doing at RD Lee Capital Partners, right? To introduce people to the fund, to no longer talk in just we'll still educate, but to no longer talk in the abstract, to actually talk in this is what the actual investment plan is. This is how we're going to mitigate our risk. This is how we're going to make money. This is the team of veteran people who've been doing this for decades that are working with me to ensure we have the best opportunity to get the greatest returns on our investment. So, whereas you mentioned that I haven't been doing this that long, I'm working with people that have been doing this for decades. Property managers, acquisition team, asset managers, legal, accounting, like people who've been in this space for decades. I'm talking almost 200 years of combined experience that will be operating partners on the fund. So, whereas my expertise is in operations, right? My time with Bridges and Tunnels, that's 22 years of operations experience, 22 years of getting shit done, right? That's what I bring to the table. I execute. I vision, and I envision and I execute. My expertise from running several other businesses, that's what I bring. Over 20 years of experience in that. As far as a specific hotel industry experience, my operating partners, they'll be bringing about 200 years worth of that. So that's the next step of educating people on investing in hotels, and now actually having an opportunity that once they learn, if they're interested, to actually invest, and we start making some money together.
Excellent. And staying on the topic of education, right now, most of our focus in this conversation has been around hotel investing, naturally. And, this is just from conversations that I've had. When you mention investing, people instantly think stock market. And with the increased volatility, I want to say over the last 2 months, depending on your experience with the stock market, it's either time to pull out and run, or this is like wholesale, right? It's time to buy everything up because everything will go back up the beginning of next year or Q2. Is there any uniqueness to the hotel investing market versus the stock market that you can educate people on?
So what I'll say about the stock market is, if you're investing in the stock market, it should be for long term. Stock market is your hedge against inflation, right? You're buying into the companies that produce the goods and services that the masses use, right? So if a gallon of milk, costs $10, and you're invested in the company that makes milk, the value of that company goes up, and your value, your net worth goes up. You now can still afford a $10 gallon of milk. Whereas if you weren't invested and you're just working, you got to hope that your salary keeps pace with inflation, which it won't, right? So that's what I view investing in the stock market is for, is to hedge against inflation. Whereas investing in alternative investments such as hotels, that is you're buying into a business, right? So you actually have control. As an investor, someone has a control. Usually, the general partner has control on adding value to the business to exponentially increase the value, right? So you purchase the business, it's making revenue. Depending on the structure of the fund or whatever you're investing in, that revenue, that profit now gets distributed to all the investors, right? So you're getting money, whether it's monthly, quarterly, annually, off this investment. And eventually, and usually most funds have an exit strategy. And when you exit, you're looking to sell the business at a multiple. So, for example, you put money into a particular stock, right? It may grow 3% a year, 5% a year, it's going to take you about 20 years for you to double the initial investment, right, into the stock market, which is fine to keep up with inflation because in about 20 years, things are going to cost twice as much as they do now.
Mhm.
You invest in something like a hotel fund, you're going to get a preferred return. And so over the course of the whole period, you'll get distributions based upon the revenue of the hotel. But then when you exit, you're exiting at a sale of the hotel at a multiple, which you'll also will get a distribution from, right? So you're talking instead of 20 years, potentially doubling your money. You'll be able to double your money in about 5 years, right? So
Like
that's
those numbers.
the difference between investing in an alternative investment such as a hotel versus in the stock market. I think a lot of people look at the stock market like when you speak about people aren't investing as much in the stock market because they're gambling. They're looking at these unicorns, right? Where, oh man, this thing was $20, and then all of a sudden they found the cure for cancer, and now it's worth $2,000 a share, right?
Mhm.
That's a once in a lifetime thing that happens for people, and really, to be honest, the people who make the most money from the stock market are the people who invest in these alternative investments that eventually become public companies. And when it becomes public and goes on the stock market and everyone else goes and buys it, the
Yep.
people that invested the money first,
Make a
they're
boatload of money.
the ones that get rich. While the rest of us are waiting 20 years to, just to say, oh man, I invested in 10,000, now it's worth 20,000, but my $50,000 car is now worth 100,000. So,
Mhm.
Brutal.
yes, so that's my take on that.
All right. Earlier in the show, you spoke about the evolution of the black quarterback as far as the history of the NFL goes and where it is today and why so many starting quarterbacks are black just due to athleticism and other things. But as far as flipping that back to hotel investing, what do you think it'll take as far as history is concerning for black ownership to be more prominent in hotel investing as well going forward?
Well, a couple things. One is just access to information, um, people learning about it, but also visible representation. It's hard to envision yourself in something that you haven't seen. You know, how many, how many black people or that look to be in politics thought about being president before Obama? And now how many are thinking now, right?
Right.
We're only 2 elections removed from having another black person running for president, right? Like think about that. We see he did it, and we're only 2 elections before him. There was none.
Yep.
Two elections removed, we have someone else. You know, it's really the visible representation of it. Like I spoke about my sensei, Davon Reeves. She's a black woman, right? Maybe that's what made me think, hey, I could do this too, right? It's really the visible representation that I think will lead to greater increase of hotel ownership for black people.
Absolutely, man. Absolutely. Representation. We talk about equity and mentorship all the time in the healthcare industry. If people don't have somebody that they can identify with, someone that looks like them, it doesn't seem realistic. The journey seems a little longer, a little bit harder. So knowing that RD Lee Capital Partners is here to kind of bridge that gap is it's an amazing thing, man. But it's great that you bring up the election, and you don't have to tell us who you're going to vote for, but it
Kamala.
is.
I'm not gonna. I'm not. I'm not.
I'm not here to sugarcoat
Yeah. And listen. It is not just like an easy. Yeah. unfortunately, as Black people in the United States, a lot of times you have to make the decision between voting for your rights and voting for your wallet.
Mm.
In her looking to raise the unrealized capital gains tax, that hurts, but going the other way, I might lose my right to vote altogether, right? So it's yeah. So when it comes to voting for my rights or voting for my wallet, I'm always going to side on my rights because I may lose the right to even have a wallet. So,
okay, no, that makes perfect sense. I mean, that led right into the question, right? What would be the potential, like impacts on the economy and investors? But I think you labeled it perfectly, right? If I can't even walk around here and have my own civil rights, where's the economy going to help me?
Yeah, right. That becomes almost null and void at that point.
Getting arrested on the way to the bank is very, very unhelpful.
Well, going to the bank and they telling you what account, and that's happened to us before. The first with the Freedmen's Bureau bank accounts, right? They just took all our money. So
yeah, that's the story of that surgeon Vivian, man. He was one of the first like real people to help develop a procedure, but he didn't get the credit for it. And it starts off with the movie with him trying to go to the bank to get his money, and they told him what money? We're closed.
Yeah. and the sad part is, right now our people are so removed, so many generations removed from those things that they either don't know or don't believe that it can happen again. But it most certainly can't. The only thing that keeps it from happening is the laws and systems that we have in place. And the people that keep the laws and systems that we have in place are the politicians.
Right.
And they, at some point, they decide that these laws no longer serve their interests.
It's been a great meeting, man. Super happy for you to have us to have your time today. But we got a couple of closing questions for you, man. Or should we do the hotspot first? What do you want to do, Shawn?
Let's go with the hotspot.
Before we get into our closing stuff, we got a couple quick fire questions for you to see where you're at. First one up. Who are your top 5 investment gurus?
Top 5 investment gurus?
Yes, sir.
Let me see. Do I have 5? Top 5. Everyone loves Warren Buffett. I'll go with him. I'll go with Melody Hobson for Ariel Capital Partners. Robert Smith for Vistra. Dead or Alive? Or
Dead or Alive. We played this game.
Then I have to add Reginald Lewis and Ray Dalio.
I gotta look into that one. I know the last one. Okay. Want to take the next one?
Yes, sir. If you could turn anything into an Olympic sport, what would you pick?
Anything into an Olympic sport? I would turn. Chicken wings, eating chicken wings.
Oh, shit. I'm not gonna lie. I didn't see that coming from you, bro. I did not see that coming. He said, "Fuck Nathan." He said, we going hard or we going home?
Yeah. See, the hot dog thing is just is we've seen it.
We've been there.
Yeah, they have their own thing. I've seen people put away some chicken wings, man, and I know there has to be a record on it somewhere, but
all right.
Like the hot one, like that show Hot Ones.
Oh, okay. Trying to ruin some colons out here.
The last spice, you want the last spice to be the wing?
Yeah.
Damn, I was hoping you let them choose their flavor of choice, but damn.
You got to make it interesting.
He said, no, you're not gonna lemon pepper your way to the championship. No.
That's wild.
Yeah. All right, next one. What quarterback in the NFL right now best resembles your investment style?
Best resembles my investment style quarterback right now.
Recently retired works as well. If you got a guy,
You know, I'm gonna if recently retired also counts, I gotta go with Tom Brady. I think the two things that made him great was him understanding what everyone on the field was doing at any given time, right? Not just him and the other 10 people on his side, but the 11 people on defense. He knew what everyone was doing on every play all the time. And additionally, he got the people that he played with to play for him. So, knowledge and leadership is, I would say, best describe my investment style.
All right. Biggest business mistake you've made that no one knows about?
I don't know if no one knows because I've told the story, but biggest business mistake I ever made was probably not investing in Bitcoin in 2013 when my friend first told me about it. I thought he was out of his freaking mind. I said, I'm not investing in some fantasy money that you don't know where it came from, who has control of it. What are you even talking about? He made a couple $1 million off of it. Yeah.
Show us somebody a 20 character encryption keys. Like, you just need one of these. It's like fam. In 2012, 2013, it was a lot.
He brought 1,000 Bitcoins when they were about $300. Yeah.
Good times.
Yeah. And so and that kind of goes to what I was saying about risk, right? You don't take enough. That was my home run, right? That was that one more risk.
Wow.
Right? So
speaking of risk as far as reward down the line, right now there are two franchises or companies that are out that are looking to expand. One being the WNBA and the other being the Big Three. If you had the chance to get in on the current ground, heading towards the future, which one would you choose to invest with?
I can see where the WNBA is now. Like I'm a big proponent of things are cyclical, and history can teach you a lot. Right now, I think with Angel Reese and Caitlin Clark, we're at the Magic Johnson, Larry Bird portion of the cycle of the WNBA, right? So we're waiting for Jordan to come in. Right now, we already have Wilson, right? She's Kareem, right? Like the best, right?
Mm-hmm.
Right now, we're waiting for the Jordan of the WNBA to come in. Angel Reese and Caitlin Clark are building the exposure, transforming the exposure of it. And we've seen this movie play out before, right? And we're just waiting for the Michael Jordan to come along to blow this thing up. I think the WNBA, I think right now the Big Three may be more profitable right now because the WNBA they lose money. It is what it is. But I think the bigger upside is with the WNBA. So I would take that risk. I would go with the WNBA because the bigger upside is there. I mean,
Excellent.
for the first time ever, right? I was somewhere, and the women's college national championship game. I was in a sports bar, and it was on every TV in the sports bar.
Mm-hmm.
Never seen that before in my life.
Yep.
That's when I knew things had. That's when I knew things. Something's changed. Something's changed. And that's it.
Yeah. And it's been amazing for us to document this. I mean, we're 4 years in with this podcast, man. And I remember when we were just talking about Candace Parker on the Sky. And, this was when Asia first came out of South Carolina and the Aces would lose it. Like, they were still trying to figure everything out. And now, to your point, to see where everything is with the Angel Reeses and the Caitlin Clarks, and you still look at the WNBA game and then the college game with like Juju Watkins and who's going to come out eventually, Paige Beckers. So, yeah, man, I love the way you broke that down. So I agree. All right. So for this last one, man, if there is any NFL recent rule change that you could remove that you think was just a bad move, which one would it be?
It's this kickoff thing.
So what is this shit? It's like, what is this shit? Every time I say it, I'm still adjusting.
It keeps throwing me off. I'm like, wait, somebody.
Why's nobody moving? Why's nobody moving?
I mean, I get it's all for safety, and so, my son plays football now, and I see how they teach them differently how to play, and I don't want to be the old man, get off my lawn, right? Like, our day, we played with leather helmets and that doesn't mean that it was right, And so, I'm for anything I love that sport and anything that they do to make it safer while not taking away from what makes it a great sport. I'm all for, but that kickoff thing is just like we're at the point where we might as well change the name from football, right? You're taking the foot out of it.
Yeah. Like, people won't really feel it until they see the Super Bowl kickoff. Like, all the lights flashing and nobody moving is gonna look so weird.
Yeah.
But until then, you know what I mean? We got to get the whole season of it.
Very true. Very true. All right, man. So once again, man, thank you so much for giving us your time today, man. It's been really cool, man. Just congratulations again on everything that you've been able to do. As we always say on this show, man, it's been amazing to see what you've done, how far you've come. But we do, have some closing questions before we get up out of here, man. The first one I'll ask you is 3 words that define your business practices.
3 words to define my business practices. Integrity, transparency, execution.
Next one for you. Where do you see yourself from a business perspective in 5 years from now?
In 5 years from now, I see RD Lee Capital Partners being bigger than my current team, having a staff of analysts, really building it out, and probably managing 3 funds at that time.
What would 12-year-old Ramel say to you right now?
This is what we should have been doing.
Yeah, it makes sense. Like, you know what I mean? Yeah. Like if Marty McFly had the almanac, it's like we should have been betting on these games. Like, you know what I'm
saying? We should have been doing it.
What's up, man? That's just something, man. Like Shawn said, it's a pleasure talking to you today, man. This was dope. This is super dope, man. We've been wanting to talk to you for a while. We just went through all the pieces to align, but this is super dope.
No, and what you guys have been doing like 4 years is, that's big, man. In 91 episodes, you guys, like, in syndication now. So like, yo, this is good stuff. Proud of you guys as well, man.
Thank you, man. Thank you. This episode means a lot to us because when we're talking about changing the trajectory of the family, what you're doing, what we're seeing a lot of family members do, man. Shout out to Precious, shout out to Christina, shout out to everybody that's just found a dream, been consistent, and most of all, spreading the knowledge. And I think, as you watch these episodes, as you get this information, if you want to reach out to RD Lee Capital Partners, when we post the episode, you'll see their actual handles and information at the bottom of the screen. And I think that's going to be very important if we're out here talking about passive income, if we're talking about changing our lives. How do we get to that point where we actually start to execute? And I think what Ramel is doing, along with his company partners, it is going to really help benefit people along those lines, man. But before we get out of here, man, any last words you have for the people?
I mean, like, at the risk of always sounding cliche, you got to be in it to win it, right? You can't complain that you're not getting ahead, that you want passive income, that you want to do these things if you're not putting in the actions that generate those outcomes, right? So, I'll just harp on, if you got to take the risk, right? If you want the reward.
Absolutely. Listen, man, grab the information, get in contact with Ramel now, because like he said, in 5 years, the price is going to go up, y'all. Yeah. And we don't want y'all coming to us saying, yo, Shawn, can you give me Ramel's number? And be like, nah, bro, price going up. You got to find another way to get in touch with him. Like, and it happens like that.
Yeah, it does.
It really does. It really does. So listen, man, as much as we love this conversation, this is that point in the conversation where we got to go, y'all. But make sure you subscribe to our YouTube channel. If you have any questions, do not forget that we will be live 3 days from now, September 18th, with Ramel Lee on FCP Live. So if you subscribe, you'll be notified when we go live. So if you have any questions, you want to follow up on anything, make sure you join the live at 8 o'clock Eastern time. We are available on all of the streaming networks, so you could come check us out. But it's that time of the day where we got to go, man. We got to get back to what we do every day. So you are now released back into your regular scheduled programming, corporate life, parental life, entrepreneurship, whatever it is that you do, we salute you. I'm Senor Lee.
And Katnick.
See y'all next pay week when we lock back in to a free state of mind.